Hello everyone, good morning. Welcome to the analysis of previous week, going over the price action of each day. And we're going to do it backwards. We're going to begin on Friday, go all the way up to Monday. And also I'm going to be showing the Notion process, basically, the things that I write on the week resumes. And hopefully a good video shows up out of it, and hopefully it's worth your time, and we'll see about that. So, oh yeah, I wanted to show first that I did this. This was the week's forecast. This is the analysis that I made before the week began, right, on previous Sunday, which is something that I'm going to be doing tonight as well. And this is pretty much my conclusion. And I do have to say, okay, so the week forecast was either right or wrong, and what things could have been a bit more detailed or just better, what failed, etc., right? But we'll get into that onto the ending. So again, we're gonna begin on Friday 19th and go all the way to Monday. And what I've done already for each session, or each day, sorry, is basically just write a couple of stuff that I maybe want to talk about, mention, or just put on my Notion, which are details that are definitely worth keeping in mind, because either it repeats itself over the week, or there's stuff that just is important in my opinion, or from my point of view at the time, right? So Friday, what happened? Friday, we had an aggressive London, which, as I've mentioned in the past, when we have something aggressive before the New York kill zone, it tends to ruin the session. Or what tends to happen based on my experience, it's that it either just ranges and then continues with the trend. It just continues with the trend. Or, what I've seen repeat itself lately is this, which is what we had on Monday and on Friday as well, which is price causes a little bit of a retracement during the session to then just continue with the trend, right? And in both cases, on Monday and Friday, we see that price actually gets to the 50%, takes a bit of liquidity, and then completely changes the direction following that trend set by everything that happened before New York, in this case, mostly pre-New York, which is this little gap in here from 5 to 7. And I mean, London did take a couple of highs here. So you can see right on buy side liquidity, aggression lower, 50-minute fair value gap, price trades into that and continues going lower, right? Lovely price action, to be honest. And yeah, so how the trades occur? Let's look that up. Turnaround liquidity, right? Clear sell side. So you can see here, half price going lower, aggressively higher. 5-minute fair value gap from this point up to this, or this candle. Can't say for sure, should have drawn that as well. Trace into that. This could have been a loss, as I mentioned on the resume. I believe, yeah, I uploaded it yesterday. Goes higher, lower, takes liquidity, starts going slowly higher, which is what I didn't like about this day at all, or this price action specifically at all. And then it continues going higher, and as you can see, we do have an entry there. So as we have an entry here, let's actually just do the next. To do the resume, I like separating things per session, or per session mostly. But what we'll do is try to get an entire picture of the entire day. So do I really need the highs? No, we'll do it like this. We can see these highs either way, so it's fine. And I want to use this on just one color. And do I want the level? Yeah, sure. Okay. Can we do it? Yeah, we can. Let's just do it like this. Does it look better for the screenshot? Okay, so this is the screenshot that I need. I'm showing what happened through London, pre-New York and everything. And New York as well. So we'll call this is, oh, I can't do that. This is heading 3. No, okay. This is what's, let's just put date screenshot. The entire price action of the day, and I messed that up. I don't think it changes between bookmark and embed. No, it's exactly the same. Not sure why there's 2 options on that, but well, it's what it is. this? How do I delete this? Okay. Okay, so this screenshot right there. And just trying to think what things I want to put in this, because usually I have a template of what to put. Okay, so that's the day's price action. How could we take advantage of this price action here? So price takes clear equal lows and starts going somewhat aggressively higher, creating 5-minute fair value gaps. The price trades into. Let's put that. So let's call it today's trades. Hate that I have to do this. Just do that. Okay, so how did that trade occur? We gotta check exactly the step by step, because it's worth. So the reason why we need to, like as an example, say, okay, so this trade happened because of this, and then that's the entry, right? The reason why that's important is because what you'll begin to do, should have opened Epic Pen as well. What you'll begin to see is, as an example, let's suppose you have trade A. I'm actually gonna do it with Epic Pen. Let's just allow it to open. There it is. If you have trade A, B, C, D, E, etc., right? You have multiple trades that you've analyzed or seen. You might see that as an example. Maybe you got step 1, 2, 3. Then on this one you got 2, 4, 3. And then on this one you have 1, 2, 4. Then 1, 2, 3. Then maybe 3, 3, 4, 1. And the thing is, as an example, you're going to see that maybe each number is like a concept or something that it happens through price, right? That's what I'm trying to illustrate here. And what you'll realize is that you see 1 happening here, twice, 3 times, 4 times. So 1 is something that we got to keep in mind a lot of times. Then you see 2 repeating almost, or actually in, well, yeah, almost every trade. So you think, okay, so that second thing, that second concept is also something that shows up a lot. And then you see step 3, not step 3, concept 3 happening 4 times as well. And then 4, let's suppose it doesn't happen here. We have 1, 2 again. 4 just happens twice, so it's something that maybe we can consider optional, or ignore the writing, optional, or just something that happens readily, but could be a good thing or a bad thing at the same time. So that's why, in my opinion, it's important to write the step by step when the trade happens, how it happens, how it's created, and everything, because it can allow us to build that like database per se of how trades occurred, and later on you can use that to basically identify trades during a session and stuff like that. So what happened first? Price, kind of would like to mention London, because we could expect a retracement. Let's just put context first. So price creates liquidity, run on a sell, immediate 5-minute displacement that goes with fair value gap and market shift. And as fourth is price trace into that. Lower time frame display, no, not lower time. Lower time frame has slow reaction, not much displacement at all. Then we see displacement creating 1-minute effigy. I mean, the market shift happens here. Thing is that there's no fair value gap created. There's this major, not major, but a little bit of a bigger structure here being broken, which happens along with the creation of the fair value gap. So I guess that could be something. As an example, that's maybe something that we could write to maybe then we see multiple times this happening where there's small reaction, minor reaction that doesn't really do much, and then this happens when it actually breaks important structure and creates a fair value gap, and that's for entry. Maybe that's something that repeats itself, but at the time I'm not going to write it, and if I continue to see it, then I might think of it as a concept or something new to keep in mind. So what I mentioned here, the thing that we're counter trend, what happens when we're trading counter trend is that we never really know how far we're gonna go, right? Because as an example, going in favor of the trend, let's suppose we have a bearish trend. If we're selling here, where do we expect price to go at the very least? Below this low, right? Because if we have a bearish trend, supposedly we have lower lows, lower highs, lower lows, and we're trying to sell that lower high that will later create the lower low. So that's why, as an example, we could have a target. But if we're trying to buy down here, price could retrace either as little as this, maybe it doesn't even retrace at all, right? We have a tiny move higher and then just continues with the trend, or maybe it does retrace a lot to the point where maybe the trend changes, goes for liquidity, external range liquidity. A lot of things could happen in the middle that we do have to keep in mind, but as an example, going for the 50% is, in my opinion, a pretty good thing to do. And ICT does mention this as well as a way to target, safe way to target. Even when you're pro trend, I do believe that he has mentioned that going for the 50%, a fair value gap around the 50% of the move is ideal because it's like the safest way, not the safest way, the safest point to get out of a trade or take profits or partials, right? So I just wanted to say that as well. So that's good enough for me. Let's just continue on to the next one. So lower time frame entries, I added the question marks because I didn't really remember. And we kind of do with this. Stop loss would have been all the way up here either way, so it's respected. But let's just ignore that. So 5-minute fair value gap creates this late entry. No, here, yeah. A little bit late as well, but a bit better, in my opinion. I do believe it was the space between, so the fair value gap size, I do believe it was a bit larger. But due to being on replay, it does kind of ruin things. So definitely worth mentioning because we're always going to have fair value gaps, both in the 5, the 15, or the 1 minute. But the important fair value gaps are the ones that, in my opinion, are worth the most. And if I believe, if I'm correct, I do believe ICT has mentioned that the good fair value gaps happen right after a run of liquidity, right? So in this case, that's a good fair value gap that happened again right after price took equal highs. So I'll show you in just a second. And after mitigating the 50% of the move, so it has retraced a lot, and it basically just is already showing signs to continue with the trend that was set again by London. So in my opinion, that's good enough. Let's put that onto this and bookmark, and yeah. So steps to this: run on BSL and 50% of the move. Let's just put it pivot mitigated. So run on buy side liquidity. Okay. Immediate 5-minute and 15-minute displacement. Market shift and fair value gaps created. And after that, price mitigates it. First reaction does not create a fair value gap. What are we targeting in this case? Lower low, right? Yeah, lower low. So what I mean with this tiny run on buy side liquidity is because of this. So you can see price goes higher aggressively here. It takes all of these highs that we have there and then immediately goes lower. So in my opinion, just think worth mentioning, you know, because I have seen trades like that happening where you have like a price going lower, creates a tiny bit of a high, continues lower, takes a high, continues lower, right? We're actually are going to see a lot through this week, if I remember correctly. Like this happens a lot, and it's something that I'm actually studying a bit, but haven't really put much effort onto it. After that, we do get a 2-minute entry in here, if I remember correctly. Nothing worth mentioning though, so let's actually keep it. And the highs that I meant were this. So you can see relatively equal highs, goes above that, and then you can see 5 and 15 displacing quite aggressively. So in my opinion, that's good enough. As a conclusion for the day, what is it that we could say? call it this. Heading 2, is that enough? I think that this was heading 2. Let's just put heading 3. I just realized that I'm putting all of this in Monday. I hope that I can actually move the embedded and stuff. Let's actually check it out. Yeah, we can. Okay, cool. And we'll leave these spaces, we'll need them anyways. Interesting PA. We saw, what's that? We saw this exact thing happen on Monday as well, where there was so what I mentioned there is that my not my trading plan, I wouldn't say it's my trading plan, but my way of execution is random stops, immediate displacement on higher time frame, either 5 or 15, lower time frame such as 1 minute, mitigates a fair value gap created after that random buy side or sell side liquidity, and in the lower time frames I'm looking for price to do exactly the same. Market shift, fair value gap, and that's my entry basically. The reason why I mention is because, as an example, in some cases we might have a week or a day where we try to look for opportunities, but we just didn't get any. And maybe we go through the day's price action and we say, well, we could have traded this, right? We might find something at the lower time frames or something we might have missed, or just a fair rally gap that just was going in the direction of the trend or daily bias. And we think, well, we could have taken that, but at the same time, if it doesn't happen the way that you expect it to happen, if it doesn't happen the way that you want it to happen, then the fact that you miss it is not bad, right? You're just following your plan, right? The way that you execute. And if no trades occur in that way, then it is what it is, there's nothing that you can actually do about it. So that's Friday for me. In my opinion, I wouldn't really need that much more. We have the entire day's price action. How do I open the picture? Oh, it's gonna open it. No, brother. Okay. I do believe that if I actually do it if I open it or do it as an embed, I'm gonna be able to open the picture. Maybe not. Okay. I thought that was the difference. Apparently it isn't. Okay, so good day, good trades, clean price action overall. Bit complicated due to what we should have known, or should have been ready for this. We basically should have understood that price could trace to then continue lower. Should have been prepared to go lower, to go higher to then go lower, which is in some cases not easy. So this price action in this case is gonna be quite easy. Right there. Bookmark, embed, same stuff. So as an example, I'm doing this entirely from scratch because I'm changing from Obsidian to Notion, but usually what I'll do is just on a daily basis just analyze what happened on the day after the market, of course, and at the end of the week all that I really have to do is just say, okay, so this and this and this and this happened through the entire week, so this and this and this repeated. There's nothing new, it's just the same things that we are looking for are just happening. And yeah, that's what we just gotta continue looking, right? I wouldn't have to do that resume if I had done it every single day, but I'm just trying to recommend you that after the session you just go back and say, okay, so price went higher here to take this liquidity, to then create liquidity lower, to then just continue lower, and that's really pretty much it. Daily resumes and week resumes are what actually gonna get you ahead of everyone, because if you do that on a daily basis, you'll start seeing stuff that repeats itself to the point where you're just gonna be like, oh yeah, this could happen today due to this and this and that, and that's pretty much it. After a run on buy side, credit price shows aggression going lower, creating fair value gaps for price to trade into. Okay, lower time from executions, no market shift though, which is a shame. At no point there was a market shift. After session opens, we see higher time for fair value gaps that we can use to look for opportunities through the session. And in this one, we do get a little bit of a late entry. But overall, a really good entry. Which is this. But I don't know why they made it like this, like much thicker than what it was, but I'm not gonna lie, I don't dislike it. Okay, so steps to this. So we're not trading the immediate fair value gap after price took the highs, right? Because the immediate fair value gap would have been this 5-minute that is around here. And at that point, here's the thing, right? Sure, we're not trading that one, but the thing is that this one has already set a trend at that point. And the reason why I say that is because it has taken buy-side liquidity and immediately causes that fair value gap. Does it cause a market shift, which is needed, of course? No, it didn't. Oh, I'm not trading the 2-minute. I wouldn't really consider that a market shift either way, you know, but that's what it is. Okay. Actually took the screenshot wrong. Okay. Hold on. Let's just delete this drawings. So I can take the screenshot without much of an issue. And that's it. I thought something was a bit weird. Okay, so just delete this one. Okay, what I was saying. What was I saying? Okay, so what I was saying is that price creates the 5-minute fair value gap here, but it doesn't cause a market shift, which in my opinion it should, right? But the thing is that, sure, we're not trading at that point. If that opens here, right, around here, right? So we're not really worried about what happens there, and this is when the magic happens, right? Because price has actually caused a market shift from this point already. And what that causes is for price to have already set a trend, right? So what is it that we have? A random buy side liquidity, displacement, market shift took a bit, but it ends up happening. We have 5 and 15 minute, if I remember correctly, just a 15-minute, trades into lower time from entry, right? Again, my opinion was a bit too low, reason why I ended up not taking it. I will talk about my mistakes this week at the end of the video, and more, but yeah, just wanted to mention that. So really good entry overall. Pretty much everything that we look for is what we got on this price action here. And as you can see, the amount of pips in our favor was definitely cool. So what did I do? Oh god, right, let's just use this. Yeah, that's fine. Steps to it. I do believe that's pretty much it. Yeah, so you can see here, we can zoom all you want. There was no lower time for entry to take there. It barely fills that gap. Barely does so, but it definitely does. So it is what it is. Let's do a bit of a resume on it. Okay, that's really all that I need to say about this beautiful day. Let's continue now to Wednesday. Let's get it from you. 5. Oh, Wednesday. Let's actually put the sessions so we understand where we are. This is Asia, by the way. Something that I'm starting to analyze a bit, but nothing really serious so far. Multiple highs together, that would have been a nice target. Activity opens and runs on sell side liquidity. Happening together is not a coincidence. So this is something we gotta give a lot of importance when seeing live. Do keep in mind we do have 1, 2, 3, 4, and 4-minute fair value gaps that led to profitable entries. But the way I go with ICT's concept don't allow me to enter on this move the way I would have liked. Okay, sure. not what I meant. Okay, today's trades. Let's go down to the 4. I'm gonna take this off because we kind of already have that. You can see how not simple but clear the entry was on this. Target would have been tricky because of course we're going just above the highs here, which is 2.94. Again, something doable, but really not what I'm expecting. So run on sell side liquidity, right, with not London's, New York open 8:30. I don't think I need to clarify that, but we'll do it anyways. Displacement higher on all 1, 2, 3, 4 minute charts. No higher time frame, 5 minute, higher time frame for volley gaps, 5, 15. 1, 2, 3, 4 minute entries work out around 2.94 R. So I've been rewatching ICT's series, and you'll see that he says that as an example after 8:30, you're going to look to the left and look for a significant high or low that price could take, right? So if I remember correctly, again, that's on the 50-minute time frame. On a 50-minute time frame. So if we go to the 15-minute time frame, we are here, right? And what is it that the closest low that we have here is this one, right? Pretty much. Or of course we can go all the way up to the high if we desire to, but this is the closest swing that we have, basically. So price trades below that, and this is the price action that ICT says that we can look for entries, right? So what is it? What does he do? 5 minute. Do we have a displacement on the 5 minute? We don't. Then we go to the 4. Do we have a displacement on the 4 minute? Yeah, but we don't have a market shift with which, if I remember correctly, we do need. 3 minute, no probably gap, no market shift. Sorry. 2 minute, no market shift again, and 1 minute does have somewhat of a market shift, although I wouldn't really consider this much of a structure. But overall, again, parabolic gaps that end up working out, right? Then we do get this other entry. So 4 minute, 1 minute after a run of liquidity, which actually looks really good. But again, I don't base my interest on that. I base my interest on 5 or 15 minute fair value gaps to then look for 1, 2, or 3 fair value gaps to enter from, right? 4 minute, I usually don't use as entries because they tend to have a pretty large stop loss, and yeah, I'm just a bit aggressive when taking the interest, and I just go for the 2 or 3 minute if the 3 minute has a tighter stop loss, which in some cases has made me miss out on interest, but overall works out well. So this was my problem with today's price action, where this was a clear run on sales liquidity and the immediate aggression higher. It just didn't give me a clear opportunity or a clear, the way that I trade, it didn't give me something clear to take, to put it in just a few words and be straight to the point. So let's just do today's conclusion. The lower time frames dilemma that I have currently is that, again, as I mentioned, ICT waits for so ICT waits for a run of buy side, sell side liquidity, and then just goes to lower time frames. And I don't know, I am not really used to that. I'm not really, because it's basically just going for the 1 minute as soon as a high or a low is taken, or of course 4, 3, 2 minutes. That my problem with that is, again, we could be forcing a lot of opportunities to the day because a lot of highs are taken, a lot of lows are taken, and of course, at the same time, we do have to keep in mind, as an example, if we're expecting a bearish week or a bearish day to I don't know what happened through London or through pre-New York or anything, we are supposedly aware of what the entry could be, what the direction could be, so we just look for interest in that direction. So when a high is taken, we are looking for that lower time frame execution or that lower time for entry. But yeah, I just wanted to say that. Not saying that ICT is wrong on this one. I'm just saying that he trades in a bit more aggressive way because, of course, he's much more used to the strategy, as he's been trading it with for I don't know how many years. And I don't feel trading that aggressively, at least not for now. Again, this is something that I've actually considered a lot, just going for a lower time frame execution, but it's just a bit difficult, at least so far. So this is Tuesday's price action. Fuck. There are some things that I hate about Notion. Basically, yeah, I mean, the way the interest worked out this day were exactly as Wednesday, which is what we just discussed, where we do get, look at that, market shift, fair value gap, price race into that, starts going higher. Of course, that doesn't happen around 830, which sucks, right? But 830 is here, aggressively lower, mitigates 5-minute fair value gap, but doesn't give a clear 1-minute entry. Continues higher. This is the first fair value gap. This is a little bit of a slow entry or late entry, as we discussed on other days. But in my opinion, this one would have been a bit more complicated due to the fact the stop loss would have been pretty large. By going with this alone, which in my opinion we should have gone with the stop loss all the way down there. So I do consider this as a very difficult entry. That could have been taken either way, but yeah, it's just complicated. As an example, analyzing this, we can see, so we have the 5-minute market shift here. We don't have any 5-minute displacement or 5-minute fair value gap, but here you can see how it built liquidity, took that, immediately displays higher, break of structure, fair value gap, and continues higher, right? Those are things that when you zoom in a bit, if you know what just happened, the round outside liquidity and the potential of the bullish bias, then this is something that we could trade quite easily, to be fully honest. Okay, so like this. This could have been one entry. And the other one would have been this, not that one, sorry. This right here. I also don't really want to like create excuses for myself, but these are just interests that I don't feel comfortable taking. Right? I'm not saying that these are not interests that I'm not saying that these are interests that I couldn't take. I'm just saying that these are interests that I'm not really comfortable taking, at least not with the level or the level of understanding that I have on this strategy or these concepts, right? So today's trades. Fuck. What did I just do? Okay. Bottom sell side liquidity, 1-minute market shift and displacement, 1-minute execution. That will be trade 1. Trade A. Okay, cool. Trade B was phase 2, mitigates phase 1 FPG. Displacement on 1 minute. No fair value gap. 1 minute fair value gap late, pretty much. 1 minute execution. Just gonna mention that. And that'll be it. That'll be it for Thursday. Just go like this. Day's conclusion. What can we say about Tuesday? Direction could have been identified quite easily due to the clear run of sell side liquidity. I think we can all admit that. Problem again, for me specifically, the way that I apply these concepts, it would have not allowed me to take entries, except that second trade, right? This one, which partially works out. Not partially works out. The trade does work out, obviously, but what I'm saying is that the fact that it didn't occur around here, or at least maybe up here, and it just went so high up, price could have just easily done something like this, taken this liquidity, and then basically just continue higher. Because sure, we can go with the stop loss up here, but price has all rights to basically go all the way down to this low and then continue with the trend. So for me, it's just not safe at all. Okay. Again, don't want to really create much excuses to myself, but at the same time, I just don't really find that I don't find it necessary to take those trades, because as an example, we get days like Friday where we do get pretty clean entries, right? Or Thursday was as well, and Monday, as we'll see now, was, right? So I just prefer waiting for those days that just work out quite nicely, and the things that I look for happen. And if they don't happen, well, there's just not much that I can really do about it, can I? These price actions, is good enough? Yep. This is what I mentioned earlier, how price creates a tiny bit of a high, takes that as a credit, and continues with the trend, which in this case is only this one. I thought there were more in the entire week. I don't know if I skipped some, which I might have. We can delete that, we already took it. So, how did the trades occur? We got bullish opportunities, which I did take, that ended up in a break-even. If I would have known target being 50% of the move and run in time it buys that liquidity, would have been a lovely target to take, because as you can see, it takes that, continues going lower, basically. And we do get one entry here, so okay. This one's going to be a bit complicated, because we have run and sell side liquidity, goes aggressively higher, creates 5-minute fair value gap. Price trades into that 5-minute fair value gap, takes a bit of liquidity in there in the meantime, ranges aggressively higher, 5-minute fair value gap, and that's where our entry happened. And where was it? This? Oh, it was... no. Yes, oh, my entry was up here. Yeah, do we get a 5-minute entry on that? Do we have a 5-minute fair value gap on that? Yeah, we do. Okay. Yeah. It's actually like this. It looks a bit cleaner on the screenshot. So we have multiple stuff to keep in mind here, which can get the screenshot a bit messy. But let's go straight to the point. Is this taking as liquidity later? No. So this entry could have worked out. This is, we will call that one trade 1. We'll call this the stop loss, which is not taken. Just want to show that. So in the screenshot, we don't think that that failed. 5-minute fair value gap. My entry... oh, it's when the 1-minute fair value gap, we had this fair value gap, which is what I was going for. Price started to retrace aggressively, and my entry was somewhere around this. Talking about MetaTrader, right? Funded account, not here on paper trading, because as I was kind of trying to trade in the funded, I just wasn't able to put it on TradingView as well. I did share the screenshot on Telegram though, but as you can see, buying here, around here, stop loss here, target this around here, that's the 50%. That's literally a 1-to-1, so it's just not something that I can trade. I do remember getting max of 2.5, maybe 2.5% or something like that. Just really not worth it, and ended up in a break-even, sadly. So entry is going to be difficult to explain. So I took it on this candle. Yeah, okay. So first entry, in my opinion, second entry, third. Okay. We'll try to work with that, but again, that'd be a bit difficult to explain this. So trade A. So this is the mitigation that I'm saying here. So we have the 5-minute fair value gap, which is what this structure mitigates. Goes aggressive, creates another fair value gap, right? And then the 5-minute fair value gap is mitigated by the lower time frames, which is this, right? So this 5-minute fair value gap around this area, right, mitigates it. And we have trade A. 1 minute, does it go below that low? It does. 1 minute market shift above this high. Fair value gap, love the entry. We'll just call it that. We're fine with that. I'm fine with that. Okay, what is that we have later? Trade 2 will be still the same structure. Tiny runs on SSL on 1 minute. 1 minute displacement with market shift? Yes. 1 minute displacement. Difficult entry because we are still around the same structure. If this would have taken the lows and then done that could have been a bit of a better entry. Keeping the lows like that would have been difficult to really consider. And then the third, which is kind of been difficult to explain. So trade C after previous trades, 5 minutes, which is created following the trend. Okay, cool. So that'll be it, in my opinion. There's conclusion. Oh, sorry. So we get this. Hold on, let me actually delete all of this. We got this entry, which this is just something that I can't take. It's just too low. What I've seen multiple times happening is that, as an example, if something like this were to happen, what tends to happen based on what I've seen is we have this huge impulse, tiny bit of a retracement, goes aggressively lower, something the lower time doesn't work out, goes above that high, mitigates something basically higher around the 50%, maybe just retraces more than what it does, right? And then lower time frame displacement, and that's the good entry to call somehow. Let me break the video in two, because if power went out or something like that, I will be furious. Okay, so yeah, so then the cells. Okay, this, and where are we? This. Cool. And for trade D, can we see that on the day's screenshot? Yeah, and do we also get a only viable entry on lower time frames? Yeah, sure, that's good enough. Okay. How was that lower time frame entry? Slow at first, clean at second. Entry would have been this. Stop loss would have been complicated because he might have been set on this, so that would have been a loss for sure. Or if it was set all the way up to this, which again would have been a bit difficult, would have been a nice trade. That would have been difficult to keep because this is running at 2.5 exactly. And it retraces all the way up almost to stop loss, so it would have been an awful entry to take due to the fact that we would have had to hold it. But for this was mostly, yeah, overall fine. So so simply not a lovely trade, not gonna lie. It would have been difficult, probably would have ended up in a break even though sure we can say there's liquidity here, a lot of equal highs the price could take. So we can expect that. So that'll be it. That's the day by day. That's the way that I like writing stuff. And as an example, something else that you can write is if you want to trade the way that I do with the phases and all that, you could say, so phase 1 did this, phase 2 did this, and this is exactly what happened, right? Something else that you can say is narrative, right? Just narrate it. So you can look at price action and say, okay, so London in this case was rangy, then pre-New York was aggressive. New York phase 1 was a retracement to then just continue with the trend. And maybe with that narration, you start seeing it in other cases, or your narrations basically start showing up a lot more, or you start understanding price a bit more. That's something that you can do, just as the trades, right? When we mentioned the step by step, as an example, if we go now to this, we could say, so I gotta do the conclusion, I'll do that in a second. So random sell side, 5 minute fair value gap. This is too messy. Let's actually look for something a bit better. Let's go to Friday and Thursday, which work quite clean. Run and buy side liquidity, 50% favor natural mitigated. Immediate 5 minute and 15 minute displacement. Lower time for mitigate 15 and 5. No fair value gap at first. Try and run and buy side displacement. Execution 1 minute. Right? So that's a trade that worked out like that, and that's great. What is that we had on this one? Liquidity created. Run and sell side liquidity. Immediate 5 minute displacement. Price raise into that. Slow reaction. Late fair value gap overall. Fair value gap that shows up. No one mentioned above, works out. Even at 50% we're kind of trend. So there are true trades that happen pretty much the same, right? Although, well, actually one is mitigated to 50% and run and buy side. But the thing is that as an example, this is exactly what I did to figure out this way of trading. I say, so takes buy side or sell side liquidity and then immediately displaces, which allows us to look for lower time frame entries. This exact thing is something that I repeated until I started realizing. So first we got to run a buy side liquidity. Market shift happens sometime. Trend is set by this move. Then fair value gap, lower time frame mitigates it, and we have the exact same price action. The exact same market structure happens in the lower time frames that gives us that lower time frame entry. Run and sell side liquidity. Displacement higher on all charts. This, as an example, is something that we could study maybe in the future, something that we realize that happens too much to just ignore it, so we start trading it, stuff like that. Run the sell side, 1 minute market shift and displacement, 1 minute execution. Mitigation of phase 1 fair value gap, displacement 1 minute, 1 minute fair value gap late, 1 minute execution, etc. Right? This Monday. So that's why daily resume and weekly resumes are always worth it, because it allows you to understand what things repeat and how you can take advantage of them, right? So I'd say that's enough for this video. Let me actually do Monday's conclusion. I mean, remember Monday's price action. I don't really have that much else to say. We could add more details, but just not really find it necessary at the time. Week's forecast should have a thing as well. That's all that I can say. It was an analysis, again, as I mentioned through the Telegram and in here, I was just expecting somewhat of a daily trend. I did analyze both bullish and daily as both where possible. Still inside a daily fair value gap, run and buy side liquidity. This is basically a data analysis. You can see the hour here if you wanted to. The analysis is set on was shared on the Telegram, so you can join there and check it out yourself. And oh well, today's analysis for this next week ahead is definitely gonna be posted just as last week. And yeah, I mean that's pretty much it. This is what I like doing on weekends, but again, I usually already have each day resumed, so I just go through it. I say, okay, so this repeated, this is something new, this is something that has started repeating itself over and over and over, so something that I can study. And yeah, that is pretty much it. So hope you enjoyed this video, pretty long one. Thank you for staying all the way here, if you have, obviously. And yeah, I guess I'll be seeing you this next week.